Hey, what's up, everybody? This is Martin from MI5. Today's video I want to talk about is called Why SoFi Keeps Dropping. So let's get straight into this video. Now you might ask, how much did it drop? Well, let's check. So we're on a one-day chart, and that's for Monday. And at 1:48 p.m., you can see in the bottom corner there that it went down to a low of 775. Now, I knew this is going to go down into the $7 range, and I'll show you a video to prove that I made Sunday on the 13th. Now, I made this video March 13th, which is Sunday 2022, and a lot of people didn't believe that. They're like, what do you mean SoFi stock's going down to $7? I'm like, I mean exactly that. And it hit the $7 mark. It said 775 it went down to. Like I said there, you can see that there. Down 39% from its high. Is SoFi stock a good buy now? Okay, this fintech stock has fallen out of favor on Wall Street. Popular venture capitalist Chamath, I'm not even going to try to pronounce that last name there, starts with a P, took SoFi Technologies public via Special Purpose Acquisition Company, SPAC, in June 2021. His debut came amid a record year for initial public offerings, IPOs, which raised a collective $594 billion. Despite that enthusiasm, many of the new I lost my place here. Many newly public companies have struggled through the latter half of the year, and SoFi is no exception. The stock currently trades 39% below its all-time high. However, SoFi is far from the only richly valued growth stock to see its share price plummet, and many of the driving forces behind the recent market volatility, the Omicron variant, high inflation, potential interest rate hikes in 2022, are temporary in nature. With that in mind, it is now a good time to invest in this fintech stock. SoFi's mission is to help people realize their ambitions through financial independence. To that end, the company takes a comprehensive, mobile-first approach to consumer finance, aiming to simplify and personalize the experience of its members. That's particularly relevant because more than half of Americans currently use more than one bank, often because no single bank provides all the necessary services. That differentiates SoFi, which offers a robust portfolio comparing two product categories. That's lending solutions and financial services. The former category includes home loans, student loans, personal loans, and the latter category includes a money management solution, SoFi Money, brokerage services such as SoFi Invest, cashback payment cards, SoFi Credit Card, credit monitoring, which is SoFi Relay, and access to third-party insurance products, which is SoFi Protect. And all of those services are available through a single mobile app, which delivers personalized financial advice to each user every day. Additionally, SoFi acquired Galileo in 2021, a fintech platform that provides digital banking services to other institutions. That includes the ability to create accounts, transfer money, process payments, and issue payment cards. And while Galileo may be an unfamiliar name to many investors, it powers 95% of digital banking in North America and 70 of the top 100 fintech companies globally. What's more, Galileo complements SoFi, powering SoFi's own money management platform. Collectively, management believes the market for financial services is worth $2 trillion, meaning there's plenty of room for multiple winners here. Even so, SoFi has differentiated itself from the competition. a rapidly growing ecosystem. SoFi's comprehensive approach to consumer finance gives it an edge. Members can spend, save, borrow, invest, earn interest in a single mobile app that is streamlined. User experience is translated into strong demand. In fact, SoFi's member base has grown by 90% or more in each of the last 4 quarters. Additionally, SoFi benefits from vertical integration. The acquisition cost per product drops for members using multiple products, meaning SoFi becomes a little bit more profitable each time a member adds another financial service through its platform. And that's exactly what's happening. The number of products used by members has grown at a triple-digit percentage pace for the last 5 consecutive quarters, outpacing growth in total members. Also noteworthy, the number of Galileo accounts jumped 80% in the most recent quarter, an impressive figure coming on top of 130% growth in the prior year. In short, SoFi's business is firing on all cylinders and has translated into strong revenue growth. So, is the risk worth taking? SoFi currently trades at a price to sales ratio of 12.6. That's certainly not cheap compared to fintechs like Block and PayPal Holdings, which trade at 5.1 sales and 9.1 times sales, respectively. However, SoFi's current valuation is cheaper than it has been for most of its history as a public company. Moreover, management is executing on a smart growth strategy and has the breadth of SoFi's product portfolio, which sets it apart from many of its peers, and that should help the company build a lasting relationship with consumers. To that end, I wouldn't be surprised to see this $15 billion company grow 5-fold over the next decade. And I think it's okay to buy a few shares at the current price, and I quote. So with that said, let's take a look at the chart. Do I see a recovery of SoFi stock anytime soon? No, I don't. I think it's going to continue to sell off, and I think my next video is going to be, or maybe even this title of this video, I'll put SoFi to $7, SoFi to $6. We're going to see $6 coming soon. It's just a continual downtrend so far. It's been very, very bearish. And like I said, it's not just SoFi. This is the whole market right now, especially with the fintech category. Like I said, we're at 986 on March 9th, and it's continuing to go down, and it's showing a very bearish pattern. Now, should you buy? That depends what your goal is. If you want to make money now, no. If you can afford to wait a long time to make any kind of a profit, and you don't need to touch any of the money that you actually invest in SoFi, then yes, you can buy now at this price range. Even if it goes lower, like I said, if you're holding for quite some time, it's going to go back up. So it doesn't matter, but it depends. If you need the money, I'd definitely not put a lot in it. Or if you're expecting a quick profit return, no, it's not going to happen. Not now, anyway. You might have to hold it a year or more, because keep in mind, they say we're going into recession. In my opinion, the recession's already here. Now, keep watching this video, because like I said, this is a SoFi stock video. But I'm going to show you what can you do to start making money now. What can you make money with in this crazy stock market and this economy? So let's get into that. Now, what can you make money in now? Let's think. What's happening? Just not so long ago, I don't know if I shared it with you guys or not, I was buying oil stocks because price of oil per barrel was going up significantly. And this is CVX, which is Chevron. So I did buy some of these, and I made, I can't remember how much I made, a little over 1,000, I think it was, on a real quick swing trade. It was just a few days, really. And you can see down here the stock on, let's get into the change the date range, do a month, the 1 month chart. So At the end of February, we were sitting at about 134.85, and then it just climbed up rapidly. And by the 8th of March, we're at 170.53. Had a little bit of a decline, went back up, kind of side traded in the 170 area, and then now we're having the decline. And why is the price of oil going back down? Is because the market had an overreaction to the situation in Ukraine and Russia. So now it's starting to pull back. And what happens when oil pulls back, and how can you make money off of that? I'll show you that. Now, when oil begins to drop, this ETF called SCO will begin to push up. And what is SCO? It's an inverse ETF, just like the ones I talked about with SQQ, S triple Q. This is pretty much the same thing, but this has to do with oil. So this stock or ETF, let's go to the 5-day chart. You can see it has gone up in a 5-day period from 584 to 650. Go to 1 month, and it was way up high here. I'm not sure what was going on at that particular time, but it came down, and now it's starting to go back up again because the price of oil per barrel is going down, and the dust is kind of settling now that the overreaction to the market has taken place, and the smoke is going to clear, and this SCO should rise up. Now, this is not a suggestion for anybody to buy, hold, or sell. Do all your trading at your own risk. Take calculated measurements and do your research before you make any trade or sell any stocks. Okay, I'm just showing you tools that are available that you could use to make money when certain stocks are going down, or oil prices, or whatever it may be. This way you guys can always make money in the stock market no matter what kind of situation is going on, whether stocks are going up or prices of oil or whatever are going down, commodities. So I just wanted to show you guys this video real quick, and I'm always trying to teach you guys how to become wealthy in as quick of a time period as physically possible. MI5 stands for millionaire in 5 years or less. These are a lot of the techniques that I use to get where I am now. So if you guys want to continue to see more of these and I earned your like, make sure you hit the like button, subscribe to the channel, and click the notification bell so you guys will receive notifications when I upload new videos. So leave a comment in the comment section down below what you guys are doing with SoFi and your other stocks, and we'll see you in the next video.